Hi everyone, welcome to this week's Click Weekly Market Brief, covering the week ending the 23rd of January 2026. This is institutional style market analysis designed for active traders. Not predictions, not hype, just a clear read on what actually moved markets and how we think about risk going forward. Let's get into it. At a headline level, markets delivered a fairly mixed but controlled performance this week. US equities were broadly stable. The S&P finished modestly higher. Nasdaq outperformed while the Dow lagged slightly. The FTSE underperformed as sterling strength and sector composition weighed. But the real story wasn't index levels. It was what happened under the surface. Volatility collapsed. The VIX fell more than 19%, which is a big move. That matters because falling volatility tells us this was not panic selling. It was repositioning. In commodities, gold and silver exploded higher. That wasn't fear. It was insurance buying. And in FX, the US dollar weakened meaningfully, driving strong rallies in the euro, pound, and Aussie. Crypto, on the other hand, saw sharp drawdowns, not chaos, but a clear deleveraging event. Technology leadership stayed intact, but it wasn't uniform. Meta was the standout performer this week, followed by Tesla, Microsoft, and Nvidia holding steady strength. Apple lagged, continuing its relative underperformance. This matters because it reinforces an important message. Index strength is hiding meaningful stock-level divergence. In plain English, not all stocks are participating, even when the index looks fine. That's a stock picker's environment, not a buy-everything market. So what actually moved markets this week? 4 things stood out. Volatility reset. First, volatility collapsed. That supported equities and allowed selective risk-taking without triggering fear. Dollar weakness. Second, the US dollar sold off meaningfully. This followed softer US economic data and growing confidence that rate cuts remain on the table later in 2026. That dollar weakness supported FX, commodities, and risk assets globally. Precious metals insurance, third as gold and silver surged. This wasn't speculative chasing, it was portfolio insurance in a low volatility environment. Crypto deleveraging, and finally, crypto saw systematic deleveraging. Liquidity came out fast, which is why the drawdown was sharp. But again, this was risk reduction, not panic. Not risk off. If this were true, risk off, volatility would be rising, equities would be breaking down, and correlations would spike. None of that happened. Instead, volatility fell, equities held up capital, rotated into metals, leverage came out of crypto, the dollar weakened. This was strategic repositioning, not fear. What we're watching next week, slide week ahead. Looking ahead, the focus remains firmly on macro confirmation. Macro, we're watching ongoing inflation data and how central banks respond to dollar weakness. Risk signals, does the VIX stay suppressed? Does the dollar stabilize or continue to unwind? And can crypto find a base after liquidation? Equities. For equities, the key question is participation. Can Nasdaq leadership broaden, or does narrow leadership start to matter? Directional bias and key levels. From a tactical perspective, and this is important, these are frameworks, not forecasts. Equities. Bias remains neutral to constructive, while volatility stays contained. But any volatility expansion changes the game quickly. FX. The dollar looks vulnerable short term. EUR, GBP and AUD benefit while that remains the case. Gold and silver. Precious metals remain supported, but silver volatility means position sizing matters. Crypto remains cautious. This looks more like a reset than an immediate opportunity. This is where discipline matters most. Low volatility can breed complacency. Dollar moves can reverse fast. Crypto volatility cuts both ways, and correlations are unstable in rotational environments. This is not a market for oversized positions or lazy risk management. To summarize the week, volatility compressed, the dollar weakened, Metals acted as insurance, crypto deleveraged. This remains a trader's market, not a trend market. It's about managing exposure, not chasing conviction. That's your weekly market brief from Click Trading Education. If you found this useful, please give the video a like, subscribe to the channel, and share it with other traders who value process over prediction. Thanks for watching. I'm Ifti, and I'll see you next week.